Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on General Motors Company, one of the largest automobile manufacturers in the world, known for iconic brands like Chevrolet, Cadillac, and GMC. General Motors has been at the forefront of automotive innovation from the internal combustion engine to electric vehicles. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
General Motors has been a significant player in the automotive industry for over a century. From a behavioral finance perspective, how do biases like the status quo bias and overconfidence influence their decision-making, especially in areas like vehicle development and market expansion?
The status quo bias is particularly relevant to General Motors' approach, especially in how they manage their core vehicle lineup and production processes. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. GM leverages this bias by focusing on continually improving their well-established vehicle models, such as the Chevrolet Silverado and Cadillac Escalade, ensuring these models remain competitive in the market. This focus on maintaining and enhancing popular models helps GM retain customer loyalty, as buyers often prefer the familiarity. Overconfidence also plays a significant role, particularly in how GM approaches its expansion into new technologies and markets. Overconfidence refers to the tendency for people to overestimate their abilities or the success of their strategies. GM leadership might exhibit strong confidence in their ability to lead the transition to electric vehicles, EVs, and autonomous driving technologies, expecting these innovations to drive future growth. This confidence drives GM to invest in electric and autonomous vehicle technology, with the expectation of establishing a dominant position in the future automotive landscape. However, this approach also poses risks if the company overestimates the speed of adoption for EV or underestimates the challenges associated with developing and scaling autonomous vehicles.
And this focus on leveraging the status quo bias and overconfidence has helped General Motors maintain its leadership position in the automotive industry, appealing to both traditional car buyers and investors who are interested in the future of transportation.
Exactly. General Motors' strategic use of the status quo bias in maintaining and enhancing its popular vehicle models, combined with overconfidence in pursuing technological advancements, appeals to investors looking for a company that balances operational reliability with forward-thinking innovation. However, this approach also means that GM must carefully manage the risks associated with market volatility, technological disruptions, and competitive pressures, particularly as the automotive industry continues to shift towards electrification and autonomy.
Let's talk about diversity, equity, and inclusion at General Motors. As a major player in the automotive industry, DEI is particularly important for GM. How does this intersect with behavioral finance?
General Motors' approach to DEI is crucial, especially as the company operates in a global and highly competitive industry where inclusivity can drive better decision-making, innovation, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance GM's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows GM to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the automotive industry. For investors, GM's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help GM build stronger relationships with employees, customers, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like automotive manufacturing, where the ability to foster inclusivity and innovation is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, General Motors not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, General Motors operates in a highly competitive and capital-intensive industry. How does the company adapt to changing market conditions and technological advancements, and what role does behavioral finance play in this?
General Motors' strategy involves continuously adapting its vehicle lineup, manufacturing processes, and customer engagement efforts to meet the evolving needs of consumers while maintaining its focus on innovation and operational efficiency. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, technological advancements, and shifting consumer preferences. GM ability to understand and respond to new market trends such as the increasing demand for electric vehicles, the shift towards more sustainable manufacturing practices, and the growing importance of connected car technology allows it to stay relevant and competitive. By using data analytics, customer feedback, and market research, General Motors can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the automotive industry.
And this adaptability is essential for General Motors, especially as they face competition from other automotive manufacturers and the growing demand for more sustainable and technologically advanced vehicles. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. General Motors' focus on understanding market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the automotive industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in consumer expectations, technological advancements, and competitive pressures.
Now, let's compare General Motors to other companies in the automotive and transportation sectors like Ford, Tesla, and Toyota. How do the behavioral finance dynamics differ?
General Motors dynamics are often compared to other automotive giants like Ford, Tesla, and Toyota, particularly in their approach to innovation, market expansion, and competition. GM's strength lies in its balance between traditional automotive manufacturing and its investment in future technologies like EV and autonomous vehicles, appealing to investors looking for a company that balances legacy strength with innovation. Ford, with its emphasis on trucks and SUV, appeals to investors interested in a company that prioritizes market leadership in specific segments. Tesla, known for its leadership in electric vehicles and autonomous driving technology, attracts those looking for a company that is driving the future of transportation. Toyota, with its focus on hybrid technology and global scale, appeals to investors interested in companies that integrate sustainability with operational excellence. General Motors' behavioral finance dynamics are shaped by its reputation for innovation, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the automotive industry.
And unlike Tesla, which focuses heavily on electric vehicles and autonomous technology, General Motors' strength lies in its specialization in both traditional and future automotive technologies, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For General Motors, the focus on innovation, customer satisfaction, and market adaptability provides a unique value proposition in the automotive industry.
To sum up, General Motors Company's approach to business is deeply influenced by behavioral finance principles, whether it's through their vehicle development strategies, adaptation to changing market conditions, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives General Motors' stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.